All right, so let's get started. So thank you everyone for taking your time on a wonderful, beautiful day to actually be with me and not being outside. So a little bit about myself. I'm Gaurav Gambhir. I'm the OP here at Keller Williams Philadelphia, Fairness, and I also have a team that I run called the Condo Shop and Rent Philly and Black Label, and I'm involved in some other businesses in the property management, investment. Uh, we have a title company and a couple of other businesses. So I'm always doing a lot of number crunching, a lot of P&Ls, balance sheets, and I thought that might be a good idea for us to talk about who's interested in learning more about the P&L and the balance sheet. So I have taught a class separately on a P&L and balance sheet before. I think we're not going to repeat the same thing. We're going to talk a little bit more on the mindset about how to think about your business. And how do I think about my business as well? And I can answer some questions that you may have it. I'm also learning and growing from my experience as I'm working in the different businesses, and I'm learning from other people, and thought it might be a good thing for me to repeat myself from what I'm hearing from other people as well, so you can benefit too. So anybody who's a brand new agent here, yep. How long have you been licensed, Kobe?
I'm not licensed yet. I'm just trying to get my license. I just passed the exam.
Okay, congratulations. Perfect. And Robert, how long have you been licensed?
Like 3 or 4 years.
3 4 years. Okay, perfect. So I know a lot about Jen. I know about Kevin, Ernest, Anthony. They're all seasoned, experienced people. And I don't see Ian here on his face, so I don't know how long he's been licensed. Ian, are you able to tell us how long you've been licensed?
Yeah, hey, sorry, I'm just listening and working on some loans, but
Okay.
soaking it all in. I'm a mortgage lender.
Oh,
Yep.
it's our Ian. Sorry, I forgot your last name. Like,
Hey,
okay,
that's
perfect.
okay.
Thanks, Ian. Yeah, good. Okay. Jen, how long you been licensed? You've been with us for a long time.
I'm not actually licensed. I
Oh, I
just
didn't know that.
do the marketing and the back end stuff for the team. I'm in this point in my life where I'm not looking to do more. So I think I'm staying right where I am.
I like to be there one day.
But I like to understand all the behind the scenes stuff so I can help them get it in place.
Wonderful. That's awesome. All right. So thanks for being here. Even though you're not agent, and I'll start talking. And you can, it'll be good to have your perspective as well of how do you think for the items that we're going to be talking about. So the whole idea that we're going to talk about today is how to think of your business. There's a book called Profit First. I don't know if any people have read it. The book talks mostly about, there's a way of thinking about business. You have your income, you have minus your expenses, and then you're left with profit. So that's how usually all the companies will run and saying, here's how much income I have made, and here's how much expenses I have, and here's how much profit will be left over. And for you to increase your profitability, you increase your gross income or you reduce your expenses, right? Simple formula. There's a different mindset of looking at this whole P&L, and that is called profit first. So if you think about your company and say, I would like to, so think from a perspective of a job as well. When somebody has a job, they say, I would like to make X amount of dollars. And to make that X amount of dollars, I would like to get a job that can get me paid X amount of dollars. And to get that job, I need to go to school for maybe becoming a doctor or an attorney, or, I like it. It's my passion as well. But me to make that kind of money, this is what I need to do to become a nurse or to become, any full-time job that you can think of. There is probably an average price component behind it. And people say, well, if I become a neurologist, I can make this much money. If I become a car mechanic, I can make this much money. But unfortunately, in real estate, we always say sky is the limit. But that's an unfortunate part because there is no set goal that we set for ourselves. So if you want to set a goal for yourself, the next concept is, from my business in real estate, I would like to make this much money. To make this much money, I need to do this much of sales and not have expenses more than a certain item, that'll lead me the amount of profit that I need to make. So, so instead of thinking of the gross income first, you start thinking of the profit first. I need to make $100,000 from this business. Now show me or tell me, or let's start talking about how I'm going to make that money. See the difference? Okay. So pick your profit first, then you build a pro forma next to it. Then you filter your decisions through your pro forma, and then you review your financials monthly to make sure you're on track of doing it. So, but first is to focus on your profit. Even in our market center, we do the same thing. We focus on every year we build a budget for ourselves and say, we would like to make X number of dollars from the market center. And to be able to do that, what do we need to do to make it happen? So reasons agents don't run a profitable business. They're managing a business for production, not profit. You know, how many people do we always ask, what's your production? How much volume do you do a year? I'm a $3 million agent. I'm a $10 million agent. But we never ask them what percentage of the money you're making is actual profit. Because they could just be charging a lot less. They could be just, the cost of sales could be much higher. You know, or they're spending a ridiculous amount of marketing, or they're shortchanging themselves by giving a discounted brokerage fee. That doesn't mean just because you have a higher volume that you're very profitable as well. So, and there are a lot of people who also would also work by not creating and following a budget. So basically you are trying to do a lot of marketing, do a lot of co-listing appointments, co-buyers, buying leads, generating leads, postcards, mailing, wining, dining the clients, giving them gifts, accepting paying for professional photographs, drone videos, photography, videography, Matterport cameras. Like expenses can really add up if you have a lot more listings. Taking, one of the worst things that I've heard people always talk about. In my own experience, I've seen the same thing. Getting a very high price listing just for the sake of getting a listing is one of the worst things that you can do to yourself and to your budget. You have to spend a ridiculous amount of time. You have to spend every aspect of marketing. And then if the place doesn't sell, the next person benefits from the right price and from all the other efforts you have put in. Agents who are not reviewing their profit and loss and balance sheet every month. If you don't know where you are on a monthly basis, it's very hard to assume that you're going to end up being in the right spot at the end of the year. And agents who are not spending, or agents who are spending all of their profit, not thinking strategically about how to reinvest in their business to increase their profit further. Any questions so far? So the old way of thinking, you take the income, you take the cost of sales, you take the expenses out, that's how much profit you're left. The new way of thinking that we're talking about is you take the income, you take the cost of sales, you talk about your profit, how much profit I'm going to make, or I want to make. And you also talk about my time is worth something. So if I was working, spending all this time and I didn't make any money from my business, what's the salary I want to take from this business? Otherwise, I might as well go and invest cash into this business, but go spend my time somewhere else. So how much money do I want to take out from my time? And then how much money is left over for me to have expenses? So it's two complete different thought process. One is something may happen if I did the right things, and I don't know what's going to happen. I don't know how much money we're going to make at the end of the day. In the other way, I need to make this much money. And for me to make this much money, let's talk about how much income I have to make. So we have a very specific set goal. Do any one of you run your business that way?
I try to.
I know you do. I know you do. Kevin, you're an accountant by trade. Do you run your business that way?
Like the new way of thinking?
Yeah.
Profit first for sure. I actually do it monthly now. looking at my profit margins. I have a forecasting model and I have actuals. And so I kind of go back to the MRA model and look at 30, 30, 40, right? And 40 is the number I start with.
Okay. So if people who don't understand that, 30, 30, 40, Kevin, you want to explain what 30, 30, 40 means?
30% is expenses, 30% is cost of goods sold, and 40% is the profit. So if I have a profit that I'm trying to achieve for like commissions, that's the number I'm starting with. And then I'm backtracking to cost of goods sold is agents, GCI, and then expenses to get there. So I'm backtracking my numbers always in as what you've been putting out.
Can you consider your cost of sales if you're working it yourself as an owner salary?
So we put, because we're trying to build it out to what is the 7th level? Is that what it is? The highest level? So we actually put us, if someone, I don't sell anymore, right? So like if my wife helps a lot, we're putting her as cost of goods sold in there. Even though we're taking that salary, we're putting it in there. Now we do have some owner salary in there as well that we're taking out. So we do have that running as well in the cost of goods sold, or actually expenses. So any salary should be expenses in my,
Perfect.
that's what I mean.
So the one difference is that, if you're running a team, you may consider that as a cost of sales. But if you're running as an individual, then that is, you're paying yourself. So you have to make sure as you grow your team or as you grow your business and you want to leverage, you can be in X number of places at any given time. So at some point you will say, I have more leads than I can manage. At that point, I need more help. And at that point, you would need another agent who needs to get paid as well. And that becomes your cost of sales. So life by design form. So, we're going to talk about 3 different components on how the profit allocations are. So this is the first. You determine your current tax rate percentage. You subtract your current tax rate percentage from 100%, and you divide your profit total goal by the percentage found in step 2. The resulting answer is the GCI needed to cover your profit goals. You'll need to pay taxes on this amount. So I'll make it much more easier as an example. So let's say you say I'm in a 30% tax bracket. That means there is 70%, 100 minus 30 is 70%. For you to be able to make your net goal of $100,000, if that was your net goal, you divide that by 70%, that means you have to make $142,857 as your GCI. So if you make $142,000, you pay 30% taxes on it, you're going to net $100,000. So everybody get that? Then you pick your profit. So you have to start looking into your personal budget and say, I would like to have all my expenses spelled out, from your house payment to groceries, restaurants, utilities, internet, pet care, childcare, auto, health and life insurance, like all your personal expenses that you have. And this is irrespective of you being interested or not. I think everyone needs to do this. You should know what your expenses are on a monthly basis. That's the bare minimum you need to make to survive. If you don't know your bare minimum to survive, then you're still shooting in the dark, hoping that this business might be okay for you 2, 3, 6 months from now. So here's the 2 kinds of capital that you get. Is the human capital, you work for your money, and then the capital assets, your money works for you. So first, I had a meeting with Adam Dom a long time ago, and the first thing he told me was, interesting. He says, how much money do you make? And I gave him an answer. And he said, how many properties do you own? And I gave him an answer. And he says, how many properties are you going to buy next year? I said, I haven't thought about it. So that's the first thing that he reminded me and said, real estate can make you a living, or I should say sales or commissions will make you a living. Real estate will make you wealthy, or will build you wealth. So that's one thing that we're going to talk about today as well, that as we're going through all the monies that we're going to talk about from profit or profit cam, you have to keep one thing in mind is, why are you making the money and how are you going to make the money work for you? Because we all have the same number of hours in a day. We have to try to capitalize. How can we have money make us money? So you take the money and you put money that you're making on a monthly basis, and the money that is making you money, and that's your cash flow. You can do few things with the cash. You can spend it, you can donate it, you can hold on to it, or you can invest it. So you should think about, out of the money that I'm getting, what percentage of the money am I going to allocate to these resources or to these options? You have two basic investment options if you want to invest somewhere. You can lend the money to other people who can use your money and make a lot more money, or you can own the money and I can take control of how I'm going to spend the money. So when you give money, when you're lending some money, which you can give it to people, you can invest in money markets, CDs, stock markets, bonds, REITs, mutual funds. They control it. You invest with them, and then hopefully they make a lot more money to give you some returns. So you're letting them make the money on your money. Or you can own your money and control it. You can be owner financing, private lending. You can own businesses, do personal investments, real estate, but you control the money and you make those decisions. And then how are the financial returns come in? So I'm going to come back to this one for a second. So from here, you get all your financial returns, and then we can talk about what happens to this number 5. You go back and you make this money work for you further again. That's how people get rich. They get to the point where the money is making them money when they're sleeping. I remember this phrase that somebody said, Bill Gates makes so much money that if he saw $100 bill on the floor or on the street, by the time he bends over to pick up that money, he lost money. Like his time is so much more valuable by the second. That's how much money he makes. It's a good thing. I think it's a great thing. People should make a lot more money. People should make as much money as they can. But it should not be only about money in life. There should be a reason why you're making that money. And once you fulfill your goals with the money, then that's when it really impacts your life. And that's why we call it life by design. It's something that you want. The whole idea of today's class, to remind you, is don't let life just lead you into doing something. Take ownership of life and say, I would like my life to be this way. For that, I am going to earn this much money. And to earn this much money, this is what I need to do. I'm going to live for 100 years. For me to live a healthy life and live up to 100 years, this is what I'm going to do for that. Not that I'm going to eat healthy and work out every day and I hope I live for 100 years. Right? So that we all do, but there are people who will say, I'm going to live for 100 years and I'm going to do everything. I'm going to research so much more to find out what do I need to do and what do I need to eat to be at 100 years. Same thing with your business. I need to be able to get to this point, and I'm going to find out how to get there, as compared to I'm just going to work very hard and I hope I make it and get a successful business. So unless you know your big why, what's going to make you get up that morning? So you determine your big why. If you don't know your purpose in life, you won't know how much money you need. You determine the number of sales and GCI needed for you to run your business, as well as receive the intended profit. You determine where your business will come from and activities that are required for you to achieve that GCI. You determine the cost of running this business, and you determine who you will need to assist in our ebook as well. If you have not read the book, highly, highly recommend you at least take out the time and please read it once. I've said this a lot of times before myself in almost every training class, is for you to be able to make what we were talking about as a professional, as a nurse or as a doctor, engineer, attorney, you name it, you have to take a certain amount of time off, go to school, pay a certain amount of fees, and then you have the opportunity of making that much money. In real estate, We spend 75 hours, and in theory, we're trying to make $1 million. The education, interestingly, in our business starts after we get licensed. In other professions, you have to spend the time and training to get licensed, and then you have the right of making money. It's just a chicken or the egg, what comes first. That means once you get your license, you have to continue education. And how do you educate yourself? If you decide to be in KW, you definitely like something about KW to be here. There's a book that was written by the founder of KW called MREA. It's literally a 350-some page book. If you're not even reading that book, then you're cheating yourself. You should be reading all the other books that you want to as well. But if you decided to be in KW and you were here for a reason, take out some time and read a book. It's like taking one course and graduating to have a potential of making $1 million, and you say, I don't have the time to do it. You can't cheat yourself. Have you all heard either you have a leverage problem or a lead problem? That's something that you will realize it if you haven't realized it now. You'll work very hard to get to know people who are looking to buy and to sell. There will come a time where you will have enough people that are calling you, or the phone is ringing by itself because of your marketing and your track record. And then you won't have time to service through them. Now that's when you have a leverage problem. So if you plan to build your business, keeping in mind that one day I am going to have a leverage problem, and how do I need to build my business? It will be a different way you will be at that point when you get there. All right, questions from you guys. I can keep talking all day, but questions from you guys. All right, Shiponia, Robin, Lila. Let's have a discussion before we move forward.
I was just gonna say, I have an extra copy. Don't ask why, of that book. I have read it, just I don't know if I remember all of it. Like I haven't read it straight. I took a little break, but I'll try to brush up again. But
that's great. Great. Now, you also asked, is the idea to try and increase expenses the right way? Sure, yeah, and we will talk about that as well. You should know in the MREA book as well. There's a section that talk about how much is the right amount of expenses to spend on a monthly basis, on an annual basis of your income that you're producing. I think it's like 9.8%. Let's say 10% on lead generation. So if you're spending 10% of the money on lead generation of the gross income that you're making, then the idea is, yes, if you continue making more money, you're supposed to increase your expenses. But you can't have 40% of lead generation expense, because then your net profit is going to be so much lower, and it might be tougher for you to survive in the business with the amount of profitability you need to manage. So to make $100,000, you have to sell 10 million just to be able to survive the same amount of money, because now you're buying ridiculous amount of leads from companies like Zillow or some other place at $300 a pop, which may not be giving the same returns. So you have to see how I'm going to maximize and where's my best ROI. To build a performance, so determining your profit plan. So we talked about the number of units needed to fund a life by design. You need to know the number of, so here's how it works. So you see what your expense are. You could be part of a team, you have team member splits, you have your royalty, you have a business, you have salaries that you have to pay, lead generation cost, listing management, occupancy, this is all for the office expenses. This is how you're running your own business. So you take all those expenses, you take all the income, your cost of sales and expenses is a grand total. So this is all the expenses that you have. You take that, all the money you need, you divide by average commission, is the number of units you need to close to fund your cost of sales or business cost and expenses. The same thing we talked about the other places. All your personal expenses, you take that, you add the taxes, you take all the money that you have, divide by the to fund your personal expenses. And the same thing here as well. So if you take all the number of units that you need to get to fund your perfect life, you add them. And then you come to number and say, I need to have these 3 number of units, which will lead to, let's say, if I need to make an average sale price, what do you think the average sales price in Philadelphia is?
I would say 250, 260.
In our market center is about 336. It's much higher. So in Philadelphia, it might be in the 200s. You might be right, Ernest. I don't know the exact number, but in our market center is, including the center city, it gets to about 336.
We have a
At
lot of
336
ballers
an
in our
average,
market
3%
center.
is
That's
close
why.
to 10,000.
That's the
Yeah,
condo
that's true.
shop. The summer
Our
team
market
in
has gotten too big
Philadelphia.
now.
Yeah.
Fair enough, my friend. So if it's a $10,000 commission average, you know how many units you need to make to get your whole life together. So build yourself a pro forma. That's a 30, 30, 40 that Kevin was talking about. If your profit plan is to make $118,000 a year at a 30% tax bracket, you need to make $168,000 to be able to build a net out 118. After the 168,000, I want to net 40% profit. To make to 40% profit, that means at 168,000, 40% of 421,000 is 168,000. So I'm going to only make 168 if my gross income was 421. 421 minus my profit is left with 252. And then 421, 30% of the cost of sales is 126. And 30% of 421 is 126, which is almost close to zero. So I go the other way and say, I need to make $168,000, which after taxes will be left with 118,000 if I brought home 421,000. Any questions on this? A similar example is if I want a 25% profitable business, to net 200,000 after taxes, I need to make $285,000. If I'm a 25% net business, I need to make 1.142 million, 30% of cost of sales, 30% of expenses. Now I'm left with $171,000, which is a profitability to the business. So how profit-focused profit and loss statement may look for our teams and group. So these are some of the categories that people use in their P&Ls for teams. So listing income, all the ways you can make money. Listing income, sales income, commercial income, referral income, other commission income, other sales income. What would other sales income be, Kevin?
Broker flat fee, maybe?
I was thinking that would be the other commission income. Or the other sales be? I don't know.
Rental income? No. Yeah. I don't know what other sales
Rental income. Yeah, could be actually rental income is not mentioned here. Could be other sales income, rental income. And the cost of sales is your cap, your royalty, your listing specialist commissions paid out, your buyer agent commissions paid out, your other commissions paid out to the team, your referral income paid out. So you have other ways that you will be making money, and also you have to pay your own team as well. Howard, here's what I was telling you about. The staff salaries, here's the average about in a team that you look at. A staff is about 14.4%. Lead generation is close to 9%. I was thinking 10. 1% occupancy, 2.5% education and coaching, supplies, communication technology, auto equipment, insurance. So if you take all this 8% expense. So here's a sample P&L. If you had 1.465 million in total commission income from listings, referrals, and sales. You have your salaries, bonus structure you're paying to your employees. You have your benefits and processing for your employees. Here's your admin cost, a runner cost, a virtual assistant cost. The owner, as Kevin was mentioning, he also puts somebody from the leadership or who's a rainmaker as part of the owner compensation. Then you have other professional fees, bookkeeping, accounting, attorney, CPA. So from $1.465, after paying the cost of sales, you're coming down to $278,000. Now you also have the lead generation expenses from all the different ways you can generate your leads, your occupancy, rent, the internet, telephone, website, education, training, seminars, webinars, books, travel, your dues, parking, toll, tickets, mileage, any furniture, computers, bank fees, office supplies, insurance that you have to maintain. And if there are any other expenses that you have, comes out down to $582,000 as net income. It's 39.72%. This was a sample team P&L. It's almost 40% profitability. Keeping in mind that we also put in the owner expense in there. Before we go to the balance sheet, any questions from anybody?
I have a question. If
Yeah.
it's not too much trouble, can you email me these slides, Gaurav? Is that going to be a big deal for you to do that?
No, everybody who registered on this call today is going to get an email with the PDFs. And then what I'm also going to bring in, send to everybody is the Excel sheets, a worksheet that you can use for yourself. And I want to share this with you as well.
I appreciate that.
Worksheet. Absolutely. You don't have to worry about taking notes on my classes. I always like to just send everything to people. It's easier that way. Here's a monthly personal budget worksheet. This might be just a good exercise for each one of you to do it. Go and have, everybody. Today's actually a tax day. So interestingly, everybody should be knowing what this sheet will be emailed to everybody. Just go line by line and start putting these numbers down. And if there's any of the categories that are
I have Jackie here with me. I don't want to
missing, make another category. Well, Jack is extremely detailed, so as long as she's doing it, you're in good hands. Okay. Everybody can see this PowerPoint presentation?
Not see it.
I don't know if I'm frozen or somebody else is frozen.
I think you're frozen, Jay.
Okay, let's see. If I can.
Oh, there you go.
It's better. I guess go to the other room. Is it better? I think everybody's still frozen. Just you and me, Andrew. Yep, I see Kobe moving a little bit.
I'm still here too.
All right, everybody's back. Okay. Sorry, the room that I was in was Wi-Fi was choppy. Okay, all right, I'm going to share my screen again. Okay. All right, the balance sheet. Does everybody understand what a balance sheet looks like? Have anybody created a balance sheet for themselves besides Kevin? It's an accountant. But, or CPA, I should say. Kevin, are you CPA? You are CPA. Okay.
Yes, yes. But I don't do my own taxes anymore. Too
So that's a
complicated.
smart thing. Too complicated. So I may not go too much into detail into balance sheet. A balance sheet is basically all your assets and all your liabilities. It's just a sheet that lets you know what your net worth is and how much liabilities you have. So all the stuff that you have in assets of you could own real estate, but you have a mortgage payment on it. So the actual value of the asset minus the loan liability that you have is your net worth. So you could also have cash in your bank. Well, that's asset. You could have furniture, equipment. You have that as an asset. But then if there's any tax liability, notes you have to pay, mortgage you have to pay, credit cards, bills that you have to pay, it's all liability. That comes out to be a balance sheet. I don't think we need to discuss that too much in today's class. This is how much like a balance sheet would look like. Your current assets, your bank statements and your bank account, your savings, and then fixed assets. Your accountant will definitely help you with this one. I'm not an expert either, but let's not go too much into balance sheets. This is going to confuse people a little bit. Here's a monthly checklist. Review your profit and profit goals. Where are you in your progress towards meeting those goals? Review your P&L on a monthly basis and an annual year-to-date basis. Review your business expenses on a monthly basis with the formula of PRU. P is generous profit. How much profit am I generating? R is replaced with actually I take it back. P means any line item in your expenses that generates profit, mark it as P. R is replaced with a less expensive option. And U is an unnecessary, get rid of it. If you do this exercise on a monthly basis, you'll never get to the point where 6 months later or 8 months later, you would say, you know what, I should have stopped paying for that expense a long time ago. Or something was working great, and I should have reinvested in that by increasing more expenses, like Robert, you were saying before. I need to reinvest in that. If you do this on a monthly basis, you manage your business on a monthly basis. Otherwise, you're going to be stuck 6 months down the line, and it takes a 60 to 90-day jump start to get to the next cycle. So that's about 9 months away from the time you realize it. On a monthly basis, review your net worth. Know what you're worth. What was your goal and how you're going to get towards that goal, and are you in line to get there? So 2 revenue generating opportunities: product sales or service sales. They both generate revenue. Then you have a cost of sale, and the company dollars you pay. You have your operating expenses minus taxes, profit, which you can save for reserves. You can reinvest your money from profit, or you can distribute that. The cost of your bad habits is your future. Your outcomes in life are often the lag measure of your habits. I appreciate Gary Keller a lot, so I want to put his quote there. I want to take some questions. Let's talk more in detail. Robin, you've been quiet, my friend. You're a very experienced agent, so let's hear your feedback. How do you use any of these things for your own business, right? You are muted. Okay, we may get back to you. Oh, we can hear you, I think.
Oh, now.
Yes, much
Can
better.
you hear me now? Okay.
Yes.
Yeah, I'm like the worst person to ask this question to. I do this on a yearly basis. I project and for the year, and that way I can go back and check kind of quarterly if we're in line with where we need to be. The more I do this, the more I realize how important it is, because I personally hate it. I just want to go out and do, and I don't want to this planning stage is not in my 20%. But I do recognize how important it is, and I do recognize how it allows us to keep micro steering the ship as opposed to getting way off course and then dramatically changing. And as I bring on people onto my team, it becomes more and more important, because now it's, if I mess it up, then I suffer the consequences. But if I mess it up for the people that are in my office, then they're suffering, from my mistakes. So so as I go, this becomes more and more important, and so classes like this are brilliant, and I really appreciate you.
No, I appreciate. There was a. I can find, if I can find that, I'll send to you guys as well. There's a sheet that Caleb Williams had made in Gary Keller's mastermind. They had done an analysis of, if there's an individual agent, what is the average profitability percentage that agent makes? And if they had a higher business, volume business, from 3 million to 5 million, 5 to 10, and if they had 2 agents, 5 agents to become $100 million business, or a $250 million business, how does the profitability change? The profitability kept going down and down as the team became bigger and bigger. So if you have high aspirations, there's even more reasons for you to know your numbers today, because you could be winning, you could be losing so slowly, it feels like winning. Have you heard that before? Like I hear that all the time from the mastermind. You're losing so slowly, it feels like you're winning, because it creates a Ponzi scheme inside your own business. You have this cash flow coming in to fund the next expenses, but you're not making any profit, and you're not watching that profit. So by the time you realize you're so much bad in debt, or the numbers are not making sense anymore, it's so hard for you to get out of it that people just fail, or they get frustrated because now they don't want to do this because it doesn't make them as much money as they thought it was making them. So it's extremely important for you to do that today than be caught with your tail between your legs 3 or 5 years from now. So Robin, as you're building your team, it is extremely important for you, because the expenses are going to come up as you add more people in your team. You need to pay for lead generation. Then they'll ask you for support. Then they're going to ask for a raise. Then they are going to do a good job. Then they're going to ask for marketing dollars, then an admin person, then a website, then an extra phone. Then these are expenses that you may not have had. But sometimes you have to invest before the money comes in. So do I invest in a marketing person for my one person that I hired, or 2 people that I hired, to show them that I can provide the support? That means that money has to be put up front. But if you're not watching the money's coming in and the cost of sales is higher, or if the agent is demanding, or you're paying your associates a split that does not lead any profit back in the company, you're playing a numbers game, or a volume number game that may not going to make you profit at the end of the day. So extremely, extremely important for people who are building their teams, or even as a new individual agents. But people who have large teams, it's equally important there as well, because you don't want to be caught thinking that you're winning, but you're actually losing. So Honors has one of the largest teams in our offices, and him and his wife are extremely hands-on. And I see that every time there's a P&L class or profit class, he's sending somebody from his team, or he's here. So I appreciate that, Honors, that you're always trying to make sure that numbers tell a big story about a team. ADP, you are here. You're very you're a big number person yourself. So tell us a little bit about yourself and any questions you may have.
Well, me right now, what I have a spreadsheet that I've created. Really, it's just since I'm an individual agent, I have it broken out into my commissions, what I receive on a monthly basis. I have all my expenses. I have all my marketing, everything is very itemized and very specific, because I look at it and I fill it out every single month as I'm paying my bills. But it helps me focus to say, okay, I need to get more transactions. I need to, yes, I have some smaller listings, but I need to get higher listings. So I have to kind of even it out. So it really does help me focus and help me understand my business a little bit and what I've done to it.
Perfect. Thanks, Anna. I call her ADP, so it's.
Yeah.
Robin, one thing comes to mind is when I was starting my team a long time ago. One thing I did as I had more agents in the team, I kept track of every agent in my team, how much money they made, how much money I paid to them, how much money did I allocate expense for them. So I know how much money profitability was from that every agent. What I also kept track on every transaction was for every listing that we had, how much money was a gross income, cost of sales, how much did I pay the agent, how much marketing dollars did I spend on it, and then how much money was left or how much money we actually made. Because there were times when the owners were demanding, I want professional photographs, I want brokers open every weekend, I want a large sign outside my house, I want professional photographs, a brochure for everybody who walks in. I want you to follow with a X, Y, and Z, and we had to take them out for dinner 3 times to please them. Price reduction. They're just demanding clients. To find out that the money that we made was percentage-wise much smaller from the other people. I may still have done the same job, but at least I knew my numbers and at least knew my clients at that time to say, I will not make the same mistake again, knowing what mistakes I had made with some clients. So that helped me make some better decisions as I went in the long run. To be careful. When you get in a team with large numbers, it's very easily to be deceived, or it's very easily you can deceive yourself that it seems like a lot more money is coming in, but it goes out as fast as we think as well. So maintaining the P&L is extremely important. And Anna works as an individual agent. Maintaining Excel sheet could be done, but as you run into a larger team, you need to start looking into QuickBooks or some other accounting software so you can keep track of it. And now Command offers you a lot more as well. So Command has all the opportunities. You can see your pipeline, how much money you seem like you're in contract. You can see how much commissions are going to be coming in. So it's all tools available for you to be benefiting. And if you decide to be in business, there's a difference of being in business and then just being employed by your own business. You don't want to be a glorified employee of your own business, which is basically, I'm going to do all the work and save as much money as I can save by working 85 hours a week, which I think sometimes I still do. But then you're not counting your own worth. You're just working additional hours. So run a true business to see that business makes money to you. Kobe, you're new to the business. I hope I didn't overwhelm or bore you.
No, that was all good information. I'm trying to absorb everything.
That's perfect. What else can I answer you guys?
What was the biggest mistake you made moving forward in your career?
Well, in terms of what? I made a lot of mistakes. In terms of
what about
P&L,
growing
financials?
Growing your team.
I played the volume game for a long time before I realized it. That was one of my biggest mistakes. I was a victim of my own teaching that I'm telling you right now. Is that I built a very large team, but the profitability wasn't there. And in the last 2 years, we have changed that, and we are profitable again. We stopped major Zillow buying for leads that we were doing. That was killing our profitability, and we weren't closing them at the same speed. But now the relationship building, the CRM, the phone calls is much better. It's much more tougher, but much profitable as well. So I don't play that. But it's easier for me to say it because I think the perception has been built that Corner Shop is a large team. So me getting away from it a little bit is easier for me. But there was a time when I played the game, and but I hope I don't have to do that ever again, and I won't probably. So that's why we stopped buying Zillow leads, because it just doesn't make sense. The time is so much more valuable that I'd rather not waste it over a volume game. So I think that's a big lesson that I've learned a long time ago, which I've been doing a long time, and I just realized a few years ago, after moving to KW actually. Being in Gary's mastermind, hearing other top players talk about it the same way, and I started self-analyzing myself, and I was in denial for a while that I'm the unicorn that is not effective the same way. But then I think a few months into it and a year into it, I started realizing that MRE actually really works. That book actually makes a lot of sense, and I was pushing against it for a long time till I realized I'm the one who's stupid and not really the books. The book was really valuable. So I run the team now a lot from the book.
Is it a hard challenge to adjust your team from one mindset to the other?
We are still in a hybrid version. Because I couldn't change it completely. And also differently was we came from a brokerage world, not really a team environment. So we were a real estate brokerage company where every individual agent was just working for themselves under the team's platform. So we were like a team, but not really a team, but we were like a very small group of people working together. When we became a team, I was not the rainmaker. Everybody was a rainmaker for themselves. So there's a hybrid version that we had to change slowly. But I think we're doing great. We're adding a lot more support. We're building it. We're building it more like a team at this point. Lila is here. She is part of our executive team, and she, we're changing a lot month by month, and one employee or one agent at a time. So that's helping us.
Thank you.
Anything else, guys?
Gee, quick question. I don't know if this was touched on earlier, and this was a question that came up Friday as well, but would you recommend new agents to run their business from their own LLC from day one?
Would recommend a new agent run their business from an LLC? I don't think it makes a difference. The reason it doesn't make a difference is because you can write off all the expenses the same way that you write off in an LLC till a certain real value till it becomes important enough for you to run an LLC. However, start the right way. So, I don't think there's any major financial benefit. There might be some cost involved for filing your taxes, but I think you can still write off all the other expenses. And we have a CPA on the call, so Kevin, tell me if I'm wrong in some way. I don't want to give wrong information. That's just my own personal thought on it.
I always start by saying talk to your accountant.
Yeah.
Just to let you know, but it depends. Like if you're doing 10, 20 transactions, maybe not. If you're looking to grow it and really track your expenses, it might be really worth it. I think there's a few expenses that you could possibly squeak in there as an LLC more, right? But it's also about what the government will allow, if what gets audited more, because I think LLCs don't get audited as much, even though government may have announced that they're going to come down to small businesses. So it's just really what your goals is and how you're going to grow it. But I'm a firm believer of running through an LLC for an extra layer of protection. But that means you also have to buy the insurance just in case something happens. But if everyone's above the wall, that should never be an issue as well. So I always tell everyone to run an LLC, and then you have the option of an S Corp or C Corp. And again, it depends on your whole livelihood, your whole picture. So it really depends on what's going on. So that's an accountant talk as well. But as what Gaurav said is, if you're going to be in this for the long haul, run it through an LLC or some kind of corporation, and make sure you do it correctly, because I personally do that. There is a definite expense to run it that way, because you have another tax return you have to actually follow. And also, I think running it through an LLC allows you to actually put yourself on payroll. I think it's the biggest benefit of it. So I know for a fact my wife and I, as he was saying, as a corporate president running it, as a corporate officers, we put ourselves on payroll right now. We're not huge, $300,000 salaries, but we have salaries in there that we can run through the corporation as we're running our business as well. So there is benefits to it, I believe. But again, go back to your expert who's representing you doing those taxes.
Right. I would say, Andrew, when you're guiding the newer agents who are coming into the business, is like stick in for a year, see how it plays out, see if you like it, since you're making money, see the trajectory path you have. And then if it's worth forming a company, filing taxes, getting insurance and all the stuff, you can always go to the next level. But starting and adding expenses initially, it's just added burden for you to succeed. Why go through that process? That was what I would probably tell someone.
Also, if you actually go through that process, make sure you follow with the state and don't assume that you're getting approved by the name you have. Because a lot of people like to add, like, you know, I first did the same thing. Kevin told Real Estate Group and it was denied, right? And I didn't get like branded anything. And there's been people on the brokerage already. I said, that's probably going to get denied by the state. And they bought folders and all this kind of stuff and it had real estate in it. You have to have a proper name that's actually approved by the state through the commissions, at least for Pennsylvania. So just make sure you follow the rules and regulations, Andrew, when you're advising them to read the rules and regulations and make sure that's approved by the state before you announce it. Because you can't get paid as the LLC as in commissions, right? So I get paid right into my LLC.
So a qualified association, you have to get it approved by the state. So the state recognizes you as an agent, but then you have to register with them that I have an LLC that I want the state to recognize doing real estate as well. So that's so they can get paid from a broker. So you have to file the qualified association form. Guys, it's 4 o'clock. I want to be respectful of everybody's time. I'm sure we're going Zoom call by the minute. So thank you very much for being here. My cell phone number is 267-994-3870. I'm readily available. Text me anytime. And my email is gaurav@kwphiladelphia.com, GAURAV. But Nikki from my team will email everybody all the PDFs as well as the Excel sheets and the other forms that we were talking about today. So you'll have that in your email as well. Thank you very much. Good seeing you.
Thank you.
Thanks, Chief.
Uh,
Yes.
Thank you.